Okay, good evening, everyone. Welcome to the trade findings and adjustments for Tuesday, the 29th of June. This will be the last trade findings and adjustments for the first half of the year of 2021. With that said, today's probably going to be short and sweet. So let me go ahead and give it to you as simple as possible. I want to take advantage of the Democratic, good spelling there, huh? The Democratic wave of money coming into the economy via stimulus. So, really quickly, what companies can take advantage of this money? If I was to ask you guys what companies can take advantage of this money, what would you tell me? What would you tell me? What monies could take advantage of the stimulus that's coming into the economy right now? Okay, I like that one. Deer. I would think of. I actually think there'd be another one there, William, other than deer that might do even better. But what do you think? What companies do you think are going to take advantage of the Democratic wave of money? Biden would like to spend $6 trillion. I can see Bill Brandner and Lee just came in. Guys, what companies do you think will take advantage of that money? There we go. There's another one. I like it. Caterpillar, Mary, Micron, as we're trying to take advantage of the as we try to take advantage of having wafers and computer chips, right? Whisper number says Micron should beat pretty easily. So it'll be interesting to see if Micron can beat easily their numbers that they have coming out. So wait a second, and I guess we'll find that out on Thursday, right? Bill, how about you? Give me a company you think they'll take advantage of the stimulus money. Jim, I see you just came in. Jim, give me a company you think will take advantage of this money. Apple. I don't know if Apple is going to be a stimulus money because of how much money they have on there. So that might be one that I would not put in here as having stimulus or getting stimulus money. Bill, you have an idea? And who else did I ask? Jim Kohler? Do you have an idea of who might take advantage of the stimulus money? Ooh, we just had a question answer come in. Banks, maritime materials, Martin Marietta Materials. Yeah, so in general, I'm going to change it a little bit. In general, material companies, banks, I think it hurts banks. I think there's a flush of money coming in from the government. It seems to have lowered the interest rate, and I'm not sure that banks get where they're at. But here's the one that I'm thinking of: grain companies. And the one I want to focus on today is First Solar. Man, I was really hoping I could find you guys the a First Solar trade I did probably 10 years ago. Got in 15 minutes before the market closed, got out 15 minutes after the market opened the next day, was in the trade like 25, 30 minutes for $55,000. It was like a $15,000 trade that netted $55,000 on a strangle straddle with a bunch of weird, super weird volatility. I am trying to find that for you on Thursday. But I'm looking at First Solar. And I'm looking at First Solar partially because of the run that it's already had and partially because where it can get to. So let's start off with First Solar and looking at their fundamentals, right? Looking at First Solar, let's tear them apart a little bit. Income is only 517 million. It does have a 9.4 billion market cap. Sales are almost 3 billion, so it's got about a 15% profit margin. Great book to cash, great cash per share. Those are all strong. PE ratios, I'm not too sure of, but they are positive and they're growing from now into the future. Earnings this year, huge growth coming up this year. Earnings this year is down year over year. Next 5 years it's down. Past 5 years it's been down. So there needs to be stimulus. And the stimulus, in my opinion, is going to be the the trillions of dollars that we're going to receive in a stimulus plan for the green companies. I like return on assets, return on equity, return on investment. Gross margins look good. Operating margins look good. Profit margin looks good. Share float, huge. 7.8% are shorted right now. That is absolutely huge. Look at the upgrades that have come March through June. 102 price, $100 price, $110 price, although that's a downgrade by UBS. Credit Suisse is so important. Citigroup, Bank of America, Barclays. I like them. They're starting to get some opportunity. The reason why is money's going to be moving into these guys. And the neat thing is, if you look at where they're at right now, 92.67 up to 105. Have traded as high as 1010. When I look at where these guys can go to with the stimulus package and money that can be made, I kind of get excited. This makes me think, all right, there's some money to be had. Not only that, if we look, they broke out on their chart to the upside. If we just looked at the FinViz, First Solar is the way to go. If we brought it in here, this is a company that has huge upside opportunity. It just broke out of its down trend line. It has about a 15% upside opportunity in it. So this is where we would want to put our money to, at least to 105, if not 110. Now, let's take a look at their chart on stock charts. We get a mixed bag. Overbought. Overbought, probably going to have a pullback. Broke out above the 50-day and above the 200-day. Huge. So we're moving towards a golden cross, right? 50-day above the 200 has another 8% upside opportunity. Overbought, institutionalized, but we have our upside trends for the MACD. Pretty interesting because we see just as much downside as we see upside here. So let's take that into consideration. And when I was looking at doing a trade, it was a little bit difficult for me to make a decision on, right? We might see some more downside before we see upside. I have reasons to get in now. I've got reasons to wait. Give me a quick second here, guys. If I was looking at this trade, I want to, can't type there, want to do something bullish, but need time to make sure I can make some money. Now, I know some of you have been through education, and some of you are like, all right, what is he going to do, right? What would I do over some time that's going to give me an opportunity to make money? And I could kind of cap my upside. So there's a couple ones that I'm looking at. The leap long calls that act like or are a stock replacement strategy. We could do a longer term bull call or calendar bull call. And I was looking at something like this just because that could net me a great return over a period of time. So as I was looking at positions I could get into, right? A new opportunity for something I could get into. Let's get rid of these. January 23, January 22. January 23, we could get up to $110. Currently trading right now at 92.67, up 28 cents after hours. The difference between these two is only $1.30. If I was looking to get into a position, I would be looking at a 92.50 leap call. $18.07 is a pretty good opportunity for the near future. Now, a couple things on leaps or stock replacements. I'd much rather spend $18 or 20% of the cost of the value of the stock versus 92. This is 80% cheaper than buying the stock, which means in simple English, we're taking 80% of the risk of owning stock out of the equation. We're making so that we can still make money on it and not take stock ownership risk. And that, in my opinion, is important, right? You make money by not taking risk. You can make money by getting lucky, but it's not repeatable. So we want to lower our risk. That's why I would use the stock replacement strategy. Now, there is another but to it. I probably want to get out of this trade this year for paying taxes now. Sorry. So if I was going to do something like this, I probably want to add some protection. I want to find a way to protect this $18 in case, it doesn't come. In case we see a bad, I don't know, in case the Republicans decide, you know what? Not going to happen. We're not going to let the Democrats spend that kind of money. I probably want to add an option that would give me the ability to lower my cost basis. I'd probably be somewhere in December looking at a chart. I'd want it at least at $110. I could take a $5 credit in, $5.20 credit in to lower my risk to get into this position right around $12.50. So let me work some of the numbers and let me show you what I'm looking at or thinking of doing in this position, right? I'm going to get a First Solar stock replacement, which is a long call, out to January 23, 92.50 strike price. All that means is I've got the right to buy the stock at a certain price, $92.50, for a certain period of time, which is all the way out to January 2023. That is going to cost me, it's going to cost me roughly $18.07. We'll round it up to $18.10. So it's going to cost me $18.10. That's my money making part of the trade. It's the stock replacement strategy, right? Stock replacement strategy. Now, to lower my risk, sorry about that, folks. To lower my risk, I'm going to cap my upside. Someone's going to pay me, and I'm going to sell to open. At the very top, we buy to open. I'm going to sell to open a December $110 short call. A short call is I'm obligated to sell my stock at a certain price for a certain period of time. And someone's going to give me a credit of $5.20 is the midpoint. Overall investment, pretty simple. $18.10 minus $5.20 means I'm going to have a cost basis of what? $12.90, right? There we go. Maximum reward. Well, I'm going to have to sell at 110. I'm buying in at 92.50. So that equals what? $17.50. $17.50. I've got to subtract out my $12.90 of net debit, right? Which means I'm going to have roughly $4.60 if I get called out at 110. $4.60 divided by $12.90 to do a little bit of mathematics. 460 divided by 1290. It comes out to a 35.65% return on investment. Kevin, that doesn't seem really good. You've done better. You just did thousands of percent returns and 100% returns on JP Morgan, on Apple. So keeping this in mind, if First Solar moves quickly, my adjustment is to roll excuse me, roll the short call out to a June 2022, and I should put in here a December 22, June 22, $125 strike price. The reason why, if we have the right to buy at $92.50 and we're obligated to sell at $125, this is where I'm liking the opportunity, because the difference between that is $32.50. And if we subtract out of that, even if we sell at a loss, if we subtract out of that, minus maybe $15 of cost, that's where we're still going to have $17.50 or 120% return on investment. And it doesn't have to happen till this December. There's not a lot I have to do. If it goes down, right? If it heads down, I can capture most of this credit and dollar cost average for the next earnings on the way up. It's a longer term opportunity to get into a trade that last time, going back 8 years to Obama, the first term of Obama, things really took off when they started to put some of that opportunity and money to work. We might see solar power come back in for tax credits. More high energy efficient machines will come in for tax credits. It's just going to be a smarter way for us to be able to do our job. So that's what I'm looking at. That's where I would place a trade here. Are there any questions you guys have at this time? Are there any questions you guys have in regard to what I'm looking to do or what I'm going to try to do at the open tomorrow? And I do think it's relatively cheap. But that would be my trade right there. Trying to get into that position. No questions? So kind of neat. Looks like that coming out. And your snapshot analysis, not bad. Maximum profit is technically infinite. That is not correct. I'm obligated to sell at 110. Boy, these don't really work that well, is it? Right there is where I would be. I wonder why. What does it show that I'm doing wrong here? Buy one at January 23, call, sell one. Put a limit price in at 12.90. That's how I would do it. And it's not really correct. But you do have some good upside opportunity here. Why would this be funded in the green new deal items? I don't know why it wouldn't be funded. I would expect it to be funded. First Solar makes all these solar panels. The only reason I could think of why it wouldn't be funded or why it wouldn't receive a bunch of money is if they went to someone outside of First Solar. Maybe they went to Elon Musk and decided to do less solar powered panels and more infrastructure and batteries. So that's where we could run into a problem, right? Good question. I'm kind of going on past history. In past history, they God, 1 second, guys. In past history, they used First Solar and they went that way. So that's what I'm trying to go on again. Just saying, hey, you know what? Let's they made it last time. I'm following on this time. So that would be it. You're not worried about China solar panels are made. They have a rare earth elements for batteries. Right now, no. That's also a good question. Right now, no. The reason why I'm not worried about that is because um, we had that same problem again with First Solar in the past. I think it's a matter of shipping. Same reason that you see Biden in the and then wanting to do more wafers and chips made here in the United States. I think it comes right down to this as well. Lee, a little off topic. A while back, we were told OPEC would run oil cost up, then the U.S. developed better ways to produce oil so we could have it and cost would drop. Why is the cost of oil going up so much? Basically because we were an idiot and we really didn't give ourselves the opportunity for the pipeline to refine it and to hold more of the oil ourselves to then distribute out. We shot ourselves in the foot by not giving ourselves an oil refinery, and we also backed off of some of the places where we were going to have our oil. We backed off of some of the places that we could drill. So plain and simple, the United States shot ourselves in the foot. Shot ourselves in the foot, and we no longer are net net positive. We're now having to import about 3 million barrels of oil a day just to meet our needs right here. Great comments, guys. Any other comments? Any other comments you guys have that I can answer for you? All right. Hey, I appreciate you being with me here today. Hopefully that was helpful. Hopefully you guys were able to just see what I'm thinking. We'll see if I'm right. You always can get out early. That's never a bad thing. But I'd rather stay in a while and see if I couldn't do a better job of taking care of, I don't know, give myself time to be wrong in a trade. With this one, it's really doing nothing more than going back on past history and seeing how I can't continue to be successful in the future. All right, guys. Hey, have a good one. I hope this was interesting. I'll do what I can to get this up tonight, but it'll probably be up tomorrow morning. The short answer is I'm trying to get into this trade, and I'm only doing it with one contract, so it's not a huge, uh, not a huge spend, but it's going to be about 1,200 and $1,290, maybe 1,300 to get into it. So not a bad opportunity here. Bill, I'm just waiting for you to say something to contradict what I told you. Come on, give it to me. He said, I'm going to give you a break today. All right, guys. Hey, have a good evening. I appreciate your time. Again, I'll try to get this posted first thing tomorrow morning. And really, the trade is nothing more than trying to play the new Green Deal. Not too expensive. This one looks like it's going to be $1,291, and I'm trying to make roughly 460 on it. Trying to get out before the new year, so I'll pay my taxes this year. Have a little bit of downside protection. $12.90 beats having $92 of risk in the trade. Guys, have a good evening. Look forward to talking to you on Thursday. Bye-bye.